After the initial hype around Broadcom's latest quarterly earnings began to fade, the market finally had time to step back and realize the true ambition hidden beneath those numbers, to massive backlog figures, each worth $73 billion, surface like giant icebergs, effectively locking in the company's growth visibility for the next 18 months. But this is far more than a simple earnings beat. In a semiconductor industry still defined by violent cycles, Broadcom is playing a much bigger game centered on defining AI architecture itself and executing a full-scale transformation of its business model. Welcome back to Deep Dive Stock Earnings. If I had to summarize Broadcom's recent performance in one sentence, it would be this: AI has completed its transition from a growth booster to the company's core engine. Today, with some distance from the earnings release and the short-term market noise behind us, we're going to shift perspective. Let's start with the hard data that anchors the entire thesis. Broadcom's quarterly revenue climbed to $18.02 billion, up 28% year-over-year, a growth rate that's extremely rare for a company of this scale. But what truly defines Broadcom's new identity is its AI semiconductor business. The segment surged 74% year-over-year, reaching $8.02 billion in a single quarter. At this point, AI is no longer a side dish. It has become the centerpiece of Broadcom's revenue mix. This is where a major structural shift gets overlooked. Historically, Broadcom has been viewed as a communications chip company, with AI treated as incremental upside. The framework no longer works. AI is now the sole primary engine driving Broadcom's growth. If you mentally strip AI out of the picture, what you're left with is a set of traditional businesses that are growing modestly at best and in some areas, showing signs of cyclical softness. What truly puts pressure on competitors is Broadcom's pair of massive strategic buffers but valued as $73 billion. The first is an AI hardware backlog already scheduled out roughly 18 months. The second comes from the VMware acquisition, where the shift to a subscription-based model has created a similarly sized backlog of contracted software revenue. These are not abstract expectations or optimistic forecasts. This is contracted future cash flow, already locked in. This double $73 billion structure is the core pillar of my bullish view on Broadcom. Semiconductors have always been deeply cyclical, but through highly targeted acquisitions and deliberate business model changes, Broadcom has effectively armored itself against those swings. High growth AI semiconductors capture explosive upside on the front end, while sticky software subscriptions provide a steady, stabilizing stream of cash in the background. Within its customer ecosystem, Broadcom is locking down the very top of the pyramid. It's now confirmed that AI heavyweight Anthropic has added another $11 billion in orders for Broadcom's next-generation custom TPU, codenamed Ironwood Rex, bringing Anthropic's total commitment to $21 billion. At the same time, Broadcom quietly announced the signing of a fifth hyperscale customer for custom XPU designs. From Google to Meta to Anthropic, Broadcom's moat in high-end, customized AI silicon has widened to a level that's almost intimidating. The deeper implication here is that Broadcom's diversification strategy is fully paying off. For years, investors worried the company was overly dependent on a single customer like Google. That concern is rapidly becoming obsolete. Broadcom's client roster is expanding at unprecedented speed, and by embedding itself into the foundational architecture of AI training for the largest players in the world, it's effectively baking its standards into the very core of next-generation AI models. We are witnessing the most significant strategic pivot in Broadcom's history. The company is actively shedding the label of a chip vendor. Instead of selling individual components, Broadcom is now offering fully integrated rack-scale systems to major customers. Under this system sale model, SPUS, high-performance switches, power management, and advanced cooling are all bundled into a single physical rack. This is a masterstroke by CEO Hock Tan, and it's a key reason Broadcom can sustain high long-term profitability. On the surface, moving from chips to systems may look like a simple change in sales format. In reality, it's a complete elevation of the competitive battlefield. By delivering turnkey solutions, Broadcom dramatically lowers the technical barrier for enterprises racing to deploy large-scale AI infrastructure. Within that enormous backlog, one detail deserves special attention. Roughly $20 billion is tied purely to networking infrastructure. Broadcom highlighted exceptionally strong demand for its Tomahawk 6 switches, with orders far exceeding prior expectations. as large language models scale geometrically. Internal cluster communication is approaching its physical limits, turning Broadcom's networking hardware from a supporting role into a central pillar of the AI arms race. This exposes a fundamental truth of the AI era. Without high-performance networking, even the most advanced compute chips become nothing more than extremely expensive paperweights. Most investors fixate on raw GPU performance and overlook the circulatory system that connects thousands of accelerators together. Broadcom controls the critical choke point. Regarding recent concerns over slight fluctuations in Broadcom's gross margin, it's crucial to view this through a broader financial lens. These movements are a natural consequence of the company's strategic shift. In system-level sales, Broadcom must procure large volumes of HBM memory and pass it through to customers at near cost. That component contributes little to margin and mechanically dilutes the reported gross margin. This is exactly why investors shouldn't get fixated on the margin percentage itself. What we're seeing is a deliberate, strategic trade-off. Broadcom's management is focused on absolute profit dollars and free cash flow growth, net on protecting a cosmetic percentage in the income statement to ensure that the $73 billion backlog actually converts into cash over the next 18 months. Broadcom has already begun proactive supply chain investments. The company plans to build large-scale production facilities in Singapore with the explicit goal of internalizing portions of the most complex advanced packaging processes. In a world where advanced packaging capacity has become a critical industry bottleneck, this move represents a decisive effort to reclaim supply chain control. Overall, even though the earnings report is no longer new, Broadcom's hard and software dual engine and system-level transformation still make it one of the most compelling case studies in the industry. At today's valuation, could Broadcom offer more long-term certainty than NVIDIA? Share your deeper views in the comments on Deep Dive Stock Earnings. See you next time.